This is our opportunity to get our macro on and uncover the best fundamental investment opportunities across global markets. My name is Wayne McDonald. I'm the founder and I'm a Harvard economist. And I have a deep passion for all things quant, all things economics. Well, because I'm a trend trader. Yeah. So if you're going to catch a trend, there's got to be rationale behind why the markets are moving. Now, if you're watching this on YouTube and you're saying to yourself, man, it's 11 o'clock in the morning. Well, you're watching a delayed version of what we're doing live, and you can try QuantBox for less than $8 for a week. Why don't you give it a try? Test drive QuantBox for $8. QuantBox.co. And with that being said, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Let's log in. Make sure you have the right associated Gmail to get into the Google Cloud. Yeah, it's 6:30 in the morning. I'm out of coffee. Oh, minions. Need some more. Need some minions. All right, let's zoom. Pew. Look at that. Japanese stock market. Cray. What does it mean in the top right-hand corner? It means it was expected to go up, and it did go up a lot. Okay, just about 2% for the Japanese stock market. NASI's basically slightly negative expectations. S&P 500 slightly negative expectations. You're like, what do you mean? What do you mean? All right, let me explain. Let me explain. All right, so this is the neutral zone. So if it's to the left, okay, it has a score. Okay, that's negative. So quantitatively, you would say, yeah. Those are sort of things that you might expect to be bearish, but they're up. Okay, so here we go. S&P 500, a slightly negative score of -1. Okay, it's basically neutral to slightly bearish. When you quantitatively analyze economic data, doesn't mean that's what the market's doing. Okay, what is the market doing? Well, the market is up almost 1%. That's why it's in the top left. So everything over here is sort of negative scores, but are up. So, for example, Bitcoin, a score of -7. So it's way to the left. But today it's up 0.6%. So it's way to the left and up. Okay. So when you look at the Japanese stock market, QuantBox has said very up. And it is very up. So that's good. Okay. So things that are working are way up here. Things that are working are way down here. And everything is out of position. And you can see out of position this way. So, I guess you could pick dollar, for example, euro dollar, pound dollar, Aussie dollar. Some of these things could become, we're not doing technical analysis here, but the thought is if it's kind of slightly bearish, but it's bullish today, then maybe tomorrow's trade is down. Is one path of logic. Cool. So anyway, so you see now here the Japanese 225, very strong buy, very big score based on COT data, based on retail sentiment, based on seasonality, based on trend, based on GDP, based on inflation, based on unemployment. Oh yeah, look, it's way up. Yep. Okay. For now. Big moves now in the stock market. Look at that expansion since June 1st, huh? Apple hit all-time highs today. Oracle hit all-time highs today. Okay. So that's interesting. And I want to pay attention to Aussie today. But let's put this on a heat map instead. Maybe it'll help visually. Where's Aussie? Middle of the pack. Middle of the pack. Right, slightly bullish. Slightly bullish. Are there any other Aussie pairs on here? Probably not, huh? Well, Aussie CAD slightly bullish. Um, Pound Aussie up. Okay, Aussie Swissy up. See, I'm looking for Australian dollar strength because the rumor mill is milling in China. Stimulus might be on its way. So I'm trying to see how to play this. Slightly leaning toward Aussie, but look, everything that can go up is up. It's kind of funny. Hardly anything has come down. USD yen is flat right now. USD CAD, right? A lot of flats. Anyways, kind of interesting. So when you see, right, this is stock market up, commodity up, stock market up, commodity up, stock market up. That's risk on. Yeah. You think people just woke up today and said, "Oh my God, the Fed's going to pause"? Oh, now everything's at target. Maybe now I should buy. I'm like, who's buying this stuff now? That's the part I don't understand. But anyways, like, oh my God, now you're buying it today? Really? Wowzer. Wowzer. Yeah. Wow. Okay. So yeah, just for fun, I guess we'll go right into some pairs here. And this is from yesterday's little move. Okay. So previously, here's the green is a bullish buy zone, up, down, into the new bullish buy zone, up, down, new bullish buy zone, up, down. And this was yesterday's new bullish buy zone. Hard to say, huh? Bullish buy zone. Cool. What do you think? That's neat. Neat technical analysis. Cool. And the next expectation would be something like this. Cool, right? We got to be concerned, though, that we're running into other levels of resistance. So I guess we can, let's change this template and let's put it on a confluence and put it on a 4 hour. Okay. You follow this line. You see the price line where we are. So if you connect these, you're like, Would you agree that that could be resistance? So the trend is up. The economics are the economics, but that is resistance. So I'd be careful, even if you're very, very bullish. What this is saying is, you'd be lucky if you got one more out of this. You should probably take profit. The ultimate goal is up in here. Okay. Now, tomorrow we have that Fed meeting. So if I were to guess, if I had to guess, I don't like guessing, but this pattern would break in the sense like if it's going to go up, it's more likely to go up today and then people bail on it because of the risk tomorrow. But I don't know. Okay. But what we do know is this is a very real level of resistance based on price. And then this stuff up here, the gray area was June's expected top. And that pink overlap is this week's expected top. So there's a lot of weight up there. Regardless of the economics, what'll what this is suggesting is this was a buy price. this is an exit price where bulls would take profit. Would, could, should, whatever. Okay. So risk, increasing risk. The trend is up by all definitions. And be careful. Be careful. Okay. Be careful. Okay. This should be behaving very similarly. It's not as aggressive. We are on the June central pivot point. Why is that important? Well, this is the June M2 pivot point down here. And it's significant. And you can see we've visited this more than once, but it's significant because that's the best bullish buy price for the month of June. So I would assume, since we bottom, and even kind of double bottom there, that we have some bulls in this market. Okay. Well, it's important because, well, it fell all the last month, right? Basically, right? So it did reverse on the right price. But here's the thing, bears, right? Bears are interested between these two lines. This is where the bears might live. We don't know if they live there, but if there are bears in the woods, okay, don't go in that cave or go pick your blueberries somewhere else. Hey, I think this is a good spot for fishing. Okay. So, anyways, there could be bears out there, and we don't know if there are, of course, but you should be cognizant that there is a risk there. Okay. So, anyways, look at the price action: down, 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 up, up, sell, down, 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 up, up, right? Roll reversal, sell, down, 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 up, roll reversal, sell, down, 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 up, roll reversal. You see, I did this all for you as we did it. Down, 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 up, roll reversal, down, 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 up, down, 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 up, roll reversal. Okay. Down, 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 up, down, 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 up. Could be a technical change, huh? Has anything fundamentally changed? No, no. One thing that did occur during that period is during this period, the chance of a rate hike tomorrow at the Fed was going up. And then around this period, when it changed direction, um, the odds of a Fed rate hike tomorrow diminished. I think it's still about 25% chance of a rate hike, but it was higher. And then all of a sudden, dramatically, it was lower. And the weird thing is, at one point, it was 0% chance. And then all of a sudden, that changed. And then it changed back. So, anyways, maybe it's that. Maybe it's just a random walk. Who knows? But nonetheless, you can see that there are real people trading this asset because these are the exact prices you would expect that type of behavior. So, anyways, if this process continues, let's say to fulfill this destiny, right? I have this projected up from last week. Okay. We have this sort of 108 to 108 and a half area. It could go as high as almost 109. Okay. That would need to probably a spike from tomorrow and then sort of down if you believe that the ultimate trend for this is down. How would that play out? The Fed pauses, you get a spike up. Confirmation of the worst is over. And then a half an hour later, the Fed says, we don't think the worst is over. Oh, and then then there's a meltdown, right? So I'm kind of prepared for a melt up, meltdown scenario. Okay. So, anyways, what you do is you don't guess, you don't like sell now. if you're a bear, I mean, you could sell here. It's just the central pivot point. I don't care that much about it. But if you wanted to be a bear on this, because that was your bias, you would wait for some sort of reversal pattern. One cool trick from one trader to another, one cool trick is to use the past and say, when would you know this reversed from being bullish to bearish? When would you know? Now I drew a giant X. I don't know if you remember that, but anyways, okay. Old man easing into a hot bath. Remember all that convo? Yeah. So, anyways, it occurred. Okay. Then when did you know here? Okay. Well, what I discussed was the M2 trap and break, and if you recall, so let me put the chart back. If you recall, and I might have done this at FX Bootcamp or on forex.today. Maybe it wasn't QuantBox, but hey, man, I spent a lot of time in front of my charts. Anyways, the trap and break is you had done it as a bull, you enter here, or you let it do the breakout and you enter here. Okay, cool. So now what do you do? Well, once again, let it do its thing and observe. Is it going to be a breakout? Is there going to be some consolidation? And will it reverse? So you have to be ready to see the reverse before it's happened. No sense on waiting to it happen and then what? Well, then it's already happened. Someone else is already making money. Okay. So it's all about anticipation. So this is an interesting sell price. 109's more interesting. Throw in the weekly overlap, 108.5. Yeah, interesting. So a reversal up in here could be interesting for bears. Pig, big recovery. Big recovery on the pig. Great British pound. Great big pig. And holy smokes, huh? So right, the space between these two moving averages is a buy. And like I just explained on the euro dollar monthly, I just explained the buy zone for bulls. It doesn't mean it makes you a bull. If you're a bull, where's the buy zone? And that's this zone here. So we have kind of the same thing, right? The moving averages are measuring price. The pivot points are measuring market. It's a confluence. It's just measuring two different things, getting the kind of the similar result. Okay. Okay. So one of these is good enough. You don't have to have both, by the way. Here. Um, but nonetheless, higher high, higher low. And a bull is thinking this today. Once again, break it down binary. Let me get a slightly different color. Let's do bluish. This is where you expect bears to sell, and they did. This is the price in which you would expect bulls to buy, and they did. So that's why I'm like, yeah, probably this is what's next, right? Break that down slightly. Oops. Break that down slightly into more digestible pieces, and you probably get something like this. Yeah. Again, tomorrow's going to be huge. Tomorrow, the Fed is almost certainly going to pause. And it's interesting because we already know that, right? I mean, shoot. So what could possibly happen? You buy the rumor and then you sell the news. So they pause and the stock market tanks. And you're like, wait, what? That doesn't make any sense. And then what? Then they say they're not done. Okay, so who knows what's going to happen tomorrow? That's why you don't wait for tomorrow to make a decision. Hmm? Does anyone remember the discussion 2 weeks ago where I'm like, you should probably do something now based on what you think is going to happen? If you're going to front run it, it's got to be at least 10 days. Well, it's been it's been 10 days, right? So anyways, yeah, so who knows, but this is bullish. Okay? This is bullish if you're going to look at it technically. Okay? But and this is where it gets interesting. It's up now, right? Yeah. So what? Are you buying the dip? See, that's market. The market is up. Is it pound or is it dollar? Don't really know, huh? People could just be exiting dollar long positions. Maybe it has something to do with the UK has 10% inflation, right? Wait, well, it's improved. Sorry, 8.7% inflation. But they need to raise interest rates, huh? And that's the interesting thing of what's probably happening now is that it's not the difference, it's the relative change. So the USD, at the last Fed meeting, they raised by a quarter point. But we think they're going to pause. So what would the rate of change be in the near future, aka tomorrow? Wink, wink, nudge, nudge. Well, this drops to zero. The rate of change is zero. And of course, pausing, right? Pausing at 5% inflation. Well, look, the UK has a long ways to go. So this rate of change would then favor, right? Not the absolute difference, the difference in the change. And that might be some of this stuff. But, okay, this period that we're in now tends to be okay for this pair. Hmm? The 20-year average up, 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 down. Okay. So it's an okay period. And that's where you see this dramatic drop. Also, I know I'm moving my mouse around a lot, but maybe I'll draw it. Come on, Wayne. All right. Let me do it this way. This is what actually happened for the pound dollar. Okay. And this is the 20-year average for that period. It's not that bad, actually. And then what happens over the next 20 years? Oh, no, not over. On average, in this time period, over the past 20 years, what does June, July, August kind of do? And you can see, fairly up. And so it's kind of interesting that we've started that process. Okay. But you can see on an absolute scale, the United States is doing way better. So right? This pair institutionally is neutral. So if it's going up, think of it as it's going up, but without institutional investors. So okay, maybe, maybe this is dealt a weak hand, and then the Fed meeting brings it back down. You have a big correction because remember, retail short, and then we do sort of a resumption of upward trend over the summer. July, August, September, we are maybe at least less bearish, maybe slightly bullish for the time being, huh? Anywho, make sure you keep your eyes on seasonality. Okay, that's already been done. And Kiwi, I was short this. I'm not short this. I was short this. I'm not short this. But I'm watching this. Okay, let me remove some of these horizontals. Let's just keep it simple, huh, kids? Keep it simple, kids. Oh, yeah, it's down, but I need some sort of confirmation. Okay. See, if you're a bull, we have this mean reversion, which is fine. I don't really want to be a bull. Maybe I do, maybe I don't. But Kiwi's quite weak. Maybe something's changed though. Going back to what I was saying before, rumor is China is going to initiate stimulus. Remember, their import data was horrible, their export data was horrible, right? Everything is horrible. That'd be a great Lego song, right? Everything is terrible. um, oh, well, that's not great, but so we know that data. So think of it this way. Using technical analysis, right? You can see that we're stepping down, and that would be based on current economic data suggesting that the economy is not that great. But if the largest trading partner with New Zealand suddenly throws in some free money to stimulate their economy, well, this changes. This changes, and it's a market thing because people. It doesn't change GDP today. It doesn't change retail sales today. It doesn't change inflation today. But what it does suggest, right? Because again, quantitative analysis is the mathematical measurements of the facts today. It's a it's a shot. It's a picture in time. The markets are 6 months ahead. The markets are thinking 6 months ahead. So they're like, wait, China might issue stimulus. Well, they haven't even done it yet. But the market's like, ooh, really? Well, if that happens, that'll push up demand for products sold by New Zealand. Okay. Okay. So you get your price, you get your quantity. Okay. You have demand, you have supply. And what we're saying is that's a Q, by the way. Q. Okay. What we're saying is sales are going to go from 1 unit, 2 unit, 3 unit, 4 unit, 5 unit. Okay. So we got to shift the demand curve to D2, showing that we went from 3 units of whatever New Zealand is selling to China, right? Or let's just say to the rest of the world, demand goes up. Okay. And then therefore it went from three to five. There's your increase in demand. But what happened, right? Well, the old equilibrium price went from one to the new equilibrium price of two, which is obviously higher. Okay. And you're like, oh, so they're thinking ahead. Oh, wait, if China actually stimulates, that would create economic activity, which would increase aggregate demand for products outside of the Chinese borders. So they would need to import stuff. They could import stuff from New Zealand, right? Like for the manufacturing of food, lactose, powdered milk, cheeses. New Zealand exports a lot of that stuff. It's amazing how much they actually export, in particular percentage of GDP. And so what people are thinking is, what if it does this? Okay. Now I can't really think that way yet until we get a stimulus. I'd like to actually be able to quantify something, not trade a rumor. But nonetheless, the market is thinking end of the year if this starts to occur. So you want to watch these price levels. Right now, this is a mean reversion for bulls. Their ultimate target should not be higher than this. This is a zone in which a bear could bring it down. And what's most interesting about this channel is if it breaks. then we know something has actually changed. Okay. So would you enter a buy here? No, I don't think that's prudent because we still have technical analysis and it's still just a rumor. Okay. I noticed I've gone over time a little bit. So, um, one last thing before I go. Okay. Bitcoin still on my daily support. This was a doozy. We've been talking about this one a lot recently. Okay. And look at this. That looks like profit taking. I don't know. That's the exact right price. So here's the best projected price for the month of June. Okay. And the best projected price for the week is in here. Okay. It's 43.59. The number I've had is, what was it? 43. I don't remember what it was, but 30 something. Okay. I think 43.40. Okay. And it's interesting. Holy smokes. Um, this doesn't suggest bears, it suggests bulls are selling. You're like, what does that mean? Bulls don't sell. Yeah, they do when they get out of a position. Okay. Or expect VIX to go up because people don't want to exit the S&P 500, but they're now worried that it's going to come down for a while. Well, you need to hedge it with options if you're going to stay in your cash position. Okay. You know what I'm talking about? And VIX is based on the purchase of options to protect S&P 500. Okay. For example, if you're not afraid, you don't buy insurance. Huh? But if you're afraid, you do buy insurance. For some reason, that made me think of parasailing in Mexico. Yeah, you better have insurance, bro. Oh, look, in America, this would be 200 bucks, but here in Mexico, I can go for 75. It's so cheap. Uh-huh. Yeah, they don't have to like follow like laws or have insurance. Yeah, it's cheaper. So, anyways, I hope you have travel insurance. So, with that being said, peace on earth. May the pips be with you. May your profits be above average. And hey, this is QuantBox, man. Let your winners run. See you soon.